This is very exciting because it's the first event with a high-profile speaker representing a very high-profile institution and the godfather of the BRIC. So we are very pleased to have Jim O'Neill with us today. Basically, his presentation will be around 35-40 minutes. Kindly, he will allow us for a big time for Q&A. And then we will have all this presentation is being recorded, so you can access through our website. And after the Q&A, I will have another 2 or 3 minutes just to give you make some housekeeping of the chamber. So please join me and let's say greeting Jim O'Neill for his presentation. Thank you.
Sergio, thank you very much. Good morning, everybody. Or should I perhaps say Happy New Year? I think it's still early enough in the year to say that. It is, and also thank you, sir. Where's Adam? He's here. Thank you very much for you guys hosting it as well. It is a very interesting time to talk about anything to do with the BRICS as usual, and especially given what appears to be rapidly changing market views about Brazil's future and Brazil's role in the whole world as we see it swirling around us. In advance of the session, I was asked to give a brief summary of the sort of major things I would talk about, and I looked back at them this morning when I had a few minutes to sit in here, and strangely, given how much things do change, most of what I want to say is indeed in line with what I said a couple of weeks ago that I would do. So the main things I'm going to try and focus on is what really is Brazil's underlying growth trend. We see this remarkable shift in between year in recent years, and I'll try and put some colour around that. Secondly, what, if anything, is really changing about China, and what does that mean for Brazil, given how important China appears to have been, or maybe it's just coincidence. And then I'll reflect also on what, if anything, Brazil might be able to do better, and indeed where, in that context, Brazil sort of sits in the whole, or my sort of vision of the world in the whole BRIC future. I will probably also, if I have time within the 35-40 minutes I planned, mention a couple of things about the US and the Euro area, because if I don't, somebody will ask me about them anyhow, and where need be, put it in the context of the world as a whole. I also thought I would add occasionally, where I can during my presentation, some context about the rest of Latin America. As I was saying to a couple of people over the very nice breakfast that was provided, I find myself thinking over the turn of the year that in the big global scheme of things, where because of China, but also perhaps India and some other places, there is so much sort of general consensus that this is Asia's century. I find myself thinking that I'm partly influenced by having a very interesting meeting with the Colombian ambassador to the UK, that took China out of the equation because it is so ginormous. Maybe Latin America in general isn't getting its fair crack of the whip at how much is changing. If you look at, of course, Brazil itself, but Mexico, Colombia, Chile, Peru, there are a lot of quite remarkably powerful things going on increasingly in Latin America, and of course we may have some more interesting things going on in one of the places that hasn't want to be embracing so much positive change the past couple of decades, Venezuela, in the foreseeable future, but that is beyond the remit of what I'm planning to say this morning. So with that in mind, let me turn to my pictures. I'm going to try and show you about 20 or so of the pictures I have in my formal pack, and then I may use some of them again or others to respond to various questions. So my starting position is this picture. Can you see the words clearly at the back of the room? So some of you that have seen me talk about the world before in the past year or so will be familiar with this picture, others will not. And I always start with this when I'm talking about anything to do with the world, because the key thing as it relates to one part of the topic I want to focus on is the scale of change going on involving so-called emerging economies these days is so big that I think for some of them, certainly Brazil included, it doesn't really make a lot of sense to think of them as conventional emerging economies. Even though they have many aspects of their development which are still what one might associate with emerging economies, the sheer scale of their impact on the world means that one should probably think of them as being a bit different. And the yellow pie circle you see to your right, I believe that those 8 countries, the 4 BRIC countries and 4 of what I call the next 11, the next 11 being literally a phrase to describe the 11 largest, or most of the largest populated emerging countries after the BRICS. 4 of those, Mexico, Korea, Turkey, Indonesia, so those 4 in the 4 BRICS are so big, they're all at least 1% of GDP, in Brazil's case it's now 4, that we probably shouldn't think of them as traditional emerging economies. And if you take the 8 of them collectively and go back to the left-hand pie chart, they are already about 25% of global GDP, which is actually slightly bigger than the United States. And in the context of what I'm trying to say, thinking specifically about that, if they are already in aggregate bigger than the US, if on average they grow by more than the US, then obviously their share in the world is rising and their impact on world GDP is bigger than that of the US. And that is pretty unique for many of the past decades, and in fact probably for about 300 years of our past. I don't want to dwell too much on the next couple of charts. This is just sort of showing you our cyclical forecast, or our views at GSAM for this year and next. I emphasize GSAM because any of you that receive Goldman Sachs, the research department or sell side's views, they may actually differ than these. Certainly I'm very aware that we are a bit more optimistic about the US than my old colleagues in the Goldman Economics department. But in the context of Brazil and what I said at the start, of course, we start this year on the back of what has been, by the standards of the second half of the last decade, and especially as we turn the decade, 2 rather disappointing years for Brazil, which is why I said at the start, people starting to perhaps think about it a bit differently. But you can see, if you look at this year and next, it appears that, certainly appears that we are not being overly influenced by what's happened in the past 2 years. And I think it's quite important for people to reflect back on the last decade, and I'm going to come back to talk about this a bit more in a minute, not just in the context of the overall decade, but as it shifted by year. And actually, as disappointing as 2011 and 2012's GDP growth was for Brazil, especially on the back of the huge performance of 2010, 2011 and 2012 have actually been a bit stronger than 2001 and 2002. It's now 11 years since I had the, I think, good fortune of dreaming up the BRIC acronym, and I will never forget at the time, because it was 2001, just how crazy most Brazilian people thought I was. And in that context, yes, the past 2 years has been disappointing, but as we saw in the past decade, it wasn't necessarily heralding what was around the corner. Those of you, I see a couple of people nodding their heads, so there's people here obviously very aware of this. 2003 was also a disappointing year for Brazilian growth, but then from 2004 through till 2007, Brazilian growth actually, for each of those 4 years, positively surprised significantly. And it's not entirely clear to me, even though there are a couple of things perhaps that are a bit different, certainly the influence of China. it's not entirely clear to me that that same parallel is just not going to happen again. There are very special reasons why Brazil might have disappointed for the past 2 years. Here's the same thing with respect to our short-term views about inflation. And I thought I'd mention this for a few seconds too, because in the conventional local Rio and Sao Paulo forecasting crowd, as I'm sure many of you know, there was a lot of criticism of the central bank last year because it was supposedly going soft on inflation. But two things about that, I would say. First of all, as my dear Goldman Sachs colleague Paulo Leme, who's now the chairman of Goldman Sachs Brazil, the ex-chief economist of Latin America and a Brazilian native, very importantly pointed out at a speech he made with me in Sao Paulo many years ago, that Brazilian inflation anywhere in the vicinity of the targets is a staggering achievement compared to Brazil of the old days. Paulo specifically said that this was back in, I guess, 2007, if I remember rightly. Brazilian inflation that year was the same as it used to be on a daily basis when he was growing up as a teenager. And thinking about Brazil going forward, and something that I think people frequently underestimate the importance of, the fact that inflation is in this general ballpark figure, and by the way, it has stayed within inside the central bank's target, is the core of why Brazil is a different country than the past, much more than anything to do with its commodity prowess, and at the core of why I decided to, what was at the time in 2001, somewhat controversially put the B in BRIC. Second thing to say in the specific context of the central bank's policies, I don't see them going soft on inflation. I think it's more that they are, to put it in the context of central bank inflation targeters, behaving a bit more like the Reserve Bank of Australia and perhaps a bit less like the Reserve Bank of New Zealand. For those of you that have followed inflation targeting over the past 20 to 25 years, the RBNZ, the New Zealand Central Bank, was probably the first to fully embrace it. And they ran into considerable problems within a decade, in particular, and of relevance for Brazil, of a very overvalued exchange rate, and something that if they didn't try to do something about would cause significant negative consequences for the economy. And I personally believe the more flexible approach that the central bank has adopted in the past year, in circumstances of very low real interest rates around the world and what I perceive to be what was a very overvalued exchange rate and one that probably still is, a pretty sensible thing to have done. So that's my sort of take for now, at least on the cyclical things. I want to come back now to the big picture and at the core of the title of my speech. I call this picture these days my British Prime Minister's chart, because in the Conservative Party conference, our wonderful leader David Cameron actually stole one of my phrase of 2012 as one of the highlights of his speech, which I didn't realise till a couple of days later when one of my colleagues told me that the Prime Minister had said this. But he'd said, as in highly relevant to the growing controversy in the media here about the whole issue of Europe, David Cameron said in that speech, who cares about Greece and Europe because China is creating another Greece every 3 months? And that's the sort of thing you can see from this chart. The first 4 lines or rows, show you the absolute size of Greece, Spain, Italy and China, and the bottom 4 show you the change in just 1 year in the GDP of various different places. And at the core of all of this is this staggering phenomena known as China. As an aside, when I watch this amusing debate that goes around the internet as to which of the acronyms shouldn't be in BRIC, probably the one that is increasingly least deserved is not the B or the R or the I, it's probably the C, because China is of a scale which is dwarfing anything that is going on at the moment, at least, and probably for the foreseeable future in the other 3. And in the next week, we're going to get China's GDP for 2012, and it'll be very interesting to see quite what that change has been. But in 2011, the dollar value change of China's GDP was a staggering $1.37 trillion, which indeed translates into creating another Greece, actually, every 12 and a half weeks. Or as our own highly amusing CEO of Goldman Sachs, Lloyd Blankfein, said at a speech sometime in 2012, he said it was actually every 11 and a half weeks, and when I emailed him to try and correct him in his own highly amusing Woody Allen-esque fashion, he went back saying, yes, but at the speed at which Greece is falling apart, it's now only 11 and a half. I did actually also email him to tell him that the Prime Minister was getting in on our act, and in the same very witty way he emailed me back to say, well, you better mention to your Prime Minister, if the UK is not careful, China will be creating another UK every So this is the sort of scale of change which is going on in these countries. The 4 BRIC countries collectively, so China is the dominant one, but it's not just China. The other 3 in 2011 contributed about another $900 billion. So, but the 4 of them together created more than the size of Italy in just 1 year. And even though Italy has plenty of challenges, it is the 8th largest economy in the world. And now to come back to focus, well, I'm going to be repeatedly talking about China, but also now to come back to the specifics more of Brazil. Here's the change in the dollar value of GDP in the decade that went past. And I would say it's going to be tough for Brazil to repeat, in dollar terms, its contribution to the world of the past decade. After China and the US, in dollar terms, Brazil's contribution to the world was the 3rd largest of any country in the world. Actually, its contribution to the world in dollar terms, as you can see here, was slightly more than Germany. And I think when I really look at it closely in thinking how I would frame my comments, of course, a large part of that was because of the remarkable strength of the Brazilian real. When I really reflect back to 11 years ago, the big thing that's surprising about Brazil is not necessarily the fact that Brazil has become such a thing that people now acknowledge. It was the fact that the Brazilian real rose so strongly. And you'll see more in a minute. In terms of actual real GDP, Brazil didn't do that spectacularly at all, but translated into the dollar because of the incredible strength of the real, that's really where the impact has been. So unless the real were to perform by a similar degree of appreciation in the decade we have ahead, it is unlikely that Brazil's contribution in dollar terms will be of that sort of scale. Just point out also that if you look at the growth 8 countries I mentioned collectively, some people often think when they hear me talk about these things that this is something that could happen in the future. The decade that finished 2 years ago, the growth 8 countries contributed more to the world than the G7. China contributed more than the US. If you jump forward to this decade, the one that we've started, this is what we are assuming. And you'll see in real terms what those growth rates are in a second. But if you can see, you probably can't see these numbers or scales quite so easily, I'm guessing, from the back. But what in essence it's showing you is, if you could see closely, if you look closely, this decade in dollar terms, we expect the contribution of these growth 8 economies to be more than double that of the US and Europe put together. So in the big scheme of things about how the world is changing, and a sign of how little people really understand it, just look at the Financial Times or any other supposedly serious newspaper any day of the week, and all the focus is about the European crisis or the US debt crisis. In a truly global context, they are not the main driver of the world, including for many Western companies that operate in the world. China alone is going to contribute this decade more than the US and Europe put together. And that is, by definition, if it's true, therefore, the most important thing, not just in terms of external influences on Brazil, but most important, external influence on basically everywhere. Highly importantly, what you just saw, this is how it translates for the decade ahead in our view in terms of real GDP growth rates. And there are really, there's a whole series of things that I could speak on, but in view of trying to keep my time to that I said I shan't, but to focus really on four things. First of all, most importantly, if you look at the world as a whole, and I would say 90% of people that I engage with do not realize this, and certainly if they do, don't agree with it. But contrary to the widespread pessimism that prevails in most Western people's minds, this decade, because of China and the other growth markets, the world will probably grow by more than the last 3 decades. So there's the first point. Look at the past 3 decades, coincides with the 3 decades that I've worked in this industry. The world has grown on average by about 3.4%. 30 years ago, what was going on in China, Brazil, and many of these places didn't really matter for the world. Today, in a world where the BRICS are creating another Italy every 12 months, or there or thereabouts, what they're doing has a huge influence to the growth rate of the world. Second thing to say in that context, we have that 4.1% despite the fact that we have this decade the BRIC countries on average and the growth market countries on average growing by less than the decade before. But it's because they are bigger. Thirdly, within that, and despite the fact I've just said China will contribute more than the US and Europe put together, we are assuming that the days of China's 10% growth are finished. As I'll touch on in a few seconds, China's kind of all about the quality of growth as opposed to the quantity of growth going forward, which, if not definitely, certainly, probably, means that the winners and losers of the new China are different than the winners and losers of the China of the past decade or two, which almost definitely has significant relevance for somewhere like Brazil, in that it won't be as big a positive terms of trade contributor to Brazil going forward as it has been the past decade. Let me jump forward. So that's the sort of, sorry, I've missed, no, I shouldn't jump forward. Very importantly, Brazil's growth trend. Remember I showed you the picture a few minutes ago about Brazil's contribution in dollar terms the past decade. In terms of real GDP, actually the last decade, Brazil was the one that showed the softest growth amongst the BRICS. And actually, it's the only one that disappointed what we had actually assumed. And it's very interesting in the whole given my role, let's call it as Mr. BRIC, it's very interesting in the psychology of how people think about Brazil as well as the whole BRIC thing. Because 11 years ago, people thought I was nuts to even mention the B in BRIC. By 2010, people had shifted so far, including importantly Brazilian policymakers, that they seriously started to believe Brazil could grow by as much as China. Quite why people shifted that much, I'm not really sure, because for the decade as a whole, Brazil grew by 3.6. Looking at it positively, that is faster than Brazil grew by each of the previous 2 decades. And going back to what I touched on earlier, if Brazilian inflation stays stable and stays low, so the most important thing that Brazil has to do is avoid itself of the previous 30 years, then actually the decade ahead is probably pretty good. So long as it doesn't repeat the reoccurring chaos that happened between the 1960s and the 1990s. There are lots of other things which I'll touch on in a second. We are assuming for this decade that Brazil will do better again. Although importantly, it won't be in growth rates, real GDP, as strong as the other 3. And because it is very unlikely that the real will appreciate again, That's why its contribution in a global sense is unlikely to be as strong as it was the last decade. So what can Brazil do better? Beyond not repeating what it did between the 1960s and 1990s. What you see here is something called a GES, or a Growth Environment Score. It is an index of, these days, 18 different variables that we believe are critical to sustainable growth and productivity. And we do that for 180 countries. 10 is the, first time I'll mention football, highly inappropriate in the context of a Brazilian audience, but 10 is the Manchester United of GES scores. 0 is the Liverpool. I still regard them as a more important competitor, as did Paul Scholes apparently in the media last week, than Manchester City. Anyhow, 10 is where you want to get to. Let me say a few quick things about this. South Korea, as you'll see more specifically in a moment, is the model for many of these countries to think about. Out of the 180 countries we do this for, it's the second highest scoring country in the world. In my opinion, South Korea is arguably the most interesting and successful country of my lifetime, because it's transformed itself from a very low income country similar to an African one to being pretty close to that of a G7 country. If Brazil can get its GDP per capita to the level of South Korea, Brazil is going to be the third or fourth largest economy in the world for a long, long time. So it pays quite a lot of attention trying to copy what they do. Second thing to say is actually Brazil has just slipped behind China of the 4 BRICS to be, in our latest update, to be the second highest within the BRIC group. Third thing to say is, contrary to popular perception, Russia is not the weakest on this kind of thing, and many other comparable indicators I've seen, by the way. India is. India's got fantastic demographics, but it also has something called a government that never seems to get anything done. The yellow line shows you the change that's taken place in these countries over the past 15 years that we have all this comparable data. And going back to this thing about the world is a better place than people often think, every single one of these 15 countries, which are 2/3 of the world's population, have seen some improvements. Some cases it's barely noticeable. Pakistan, surprise, surprise. But in some other cases, Russia, Brazil, China, Mexico, interestingly enough, especially increasingly these days, and Nigeria, significant improvements. Here are the specific individual variables. I always sort of try to jump through this quickly because what always happens, as you guys at the back probably won't be able to see it clearly, people in the audience immediately home in on one particular number that they object to, and you end up with hours debate about it. But these are all the 18 different variables, and you see it for the 8 growth economies I've also put in the US. And you can see here where, so addressing what can Brazil do better, you can see where Brazil scores poorly. So, of course, compared to the US, on a number of them it's obvious, but in the context of what Brazil is and where it's trying to go, I would say South Korea is just as important a place to think about as well as the US. And there are really, I'd say, 2 broad areas. In terms of Brazil's trade with the rest of the world and its level of investment as a share of GDP, so on macroeconomic developments, those are the 2 that Brazil, from my perspective, seems to be relatively poor or scores lowly at. And then in terms of some of the trickier stuff, or the micro factors, if you look at the bottom 2 buckets, of which there are 8 variables, by and large, in terms of use of technology, Brazil could do a lot by thinking about South Korea. South Korea on these kind of things is the absolute best in the world. And then, of course, as those of you that do business in Brazil would no doubt have lots of evidence of, on things to do with creativity and innovation. So R&D and patents are two other areas where Brazil seems to do relatively poorly. And so from that perspective and big picture, these are the sort of things that the Brazilian administration, whoever they are, should be trying to focus on top of trying to make sure that inflation stays low and stable. Not focusing excessively on persistent use of government spending to manage the economic cycle. I'm coming up to 35 minutes, assuming we started on time, so I'm just going to spend a couple of minutes talking about China. I'm going to skirt over some of these other stuff and leave it perhaps to Q&A. I said I'd talk a bit about the US and Europe, but in view of how long I've talked already, I'm not. I want to just focus a little bit on the critical indirect issue of China, and then make a concluding comment, and I'll stop. So I showed you earlier that we are assuming this decade China's going to grow by about 7.5% instead of 10%. And I'm just going to show you, actually I'll show you 4 pictures quickly. First of all, here's a picture of China's balance of payments. A lot of focus on the media over the weekend and late last week after we just got China's December trade surplus, which was much stronger than expected. Translated into the underlying trend, which is what you can see here in the red line, China is very different today than it was before 2008. China's trade surplus for the whole of 2012 was 2.8% of GDP. As much as China's December trade surplus was a positive surprise, it comes after a couple of months of significant negative surprises. Before the crisis, it was 10% of GDP. And from my sort of 40,000 feet, what the world is all about sort of cyclically, or arguably for the decade, is a bit about China becoming a bit less like the old China and a bit more like the old US, and the US becoming a lot less like the old US and a bit more like the old China. And there are a lot of signs that that is actually happening. But as I said, as it relates for somewhere like Brazil or for many other countries, it means the consequences of the new China possibly quite different than the consequences of the old China. And in a sort of simplistic sense, it would seem to me that Brazil is not going to be as big a beneficiary of the new China as it was of the old China, whereas interestingly, and to add to the complexity of it, Mexico, the important Latin neighbor of Brazil, is probably one of the biggest winners of the new China, because it is getting back a lot of its lost competitiveness as China both deliberately and indeliberately loses its position as a low-cost, value-added producer. And you can see it in the trade data. Second picture to show you linked to this is something that we get all this data that comes out almost on the same day every month in China. And what I encourage my analysts to do is not just look at the level of each of these indicators, but in particular, we should monitor the relative performance of Chinese retail sales, which is a monthly measure of consumption. Very imperfect one, I should quickly add. Lots of issues about the quality of that data. But we monitor it against industrial production. And that's what you see here. And if the line is heading upwards, from a global perspective, that is a good thing, because it means China is consuming more relative to what it's producing. Very interesting op-ed page in the FT today, by the way, saying that Chinese consumption is probably under-recorded, which it almost definitely is. But even on top of that, there is growing evidence that China is adjusting, which means it is probably going to be wanting from the rest of the world more things to help itself consume rather than things to help it produce. And so it's going to be probably, as I suspect it already has, a much lesser net influence on a lot of commodities than it has been in the past decade or so. Third picture, this is a coincident picture of Chinese GDP. China has definitely been slowing down. It's been doing so for the past 3 years. The yellow line is a Goldman Sachs proprietary GDP indicator, something I helped the research guys developed back in 1998. Everybody talks all the time about whether we should trust Chinese GDP data or not. We certainly didn't back in 1998, which is when we developed this. I don't think there was any deliberate manipulation of the data these days in either direction. It's just that for a place changing at the scale at which they are, it's pretty unlikely that some statistical exercise that monitors some point in time is going to have the greatest accuracy of data. The red line is the leading indicator of the yellow line. Very important thing for the China bears to think about. The red line has recently started to move up. And so in this sort of simplistic hard versus soft landing debate, which is ridiculously simplistic, China's not landing anytime soon. It's going to continue to travel. But if you were to have that silly debate, this would be much more supportive for those in favour of a soft landing rather than a hard landing. So in that context, it seems to me the incoming Chinese leadership have been given a pretty good deck of cards by the old guys, because the economy has slowed but started to turn up again, and as I showed you in this previous picture, we're seeing a shift towards more consumption relative to production. Final thing to show you about it, and then I'm going to stop because I promised I would leave 20 minutes for questions, is this. FCI stands for Chinese Financial Conditions Index. It is an index, also a proprietary one that I've used for years, which tries to measure, for many, many countries, in this case China, the effectiveness or the actual true stance of economic, or in particular, monetary policy. The line going upwards suggests tightening conditions. The line going down suggests easing conditions. And this is also highly important for people thinking about the external consequences of China, as well as the great big China debate. In particular, again, for the bears, there's a sort of assumption for many people that because China's slowed, this is the beginning of the end. What a lot of the bears need to figure out is actually, in the past 3 years, Chinese financial conditions have tightened a lot. And so the main reason why China is slowed is because Chinese policymakers deliberately slowed it. There may have been some other influences. Certainly the weakness of the Eurozone has obviously negatively affected their exports. But the biggest reason why China's slowed is because the policymakers have decided they don't want 10% growth anymore because there's too many negative costs. And in that context, final thing to say about it is, very interestingly, even though inflation has slowed sharply and the economy has slowed, as of yet, Chinese financial conditions have not been eased much, which tells me Chinese policymakers are pretty happy about the fact that they have growth that has slowed and sort of shifted to a new sort of rate. And going back to what I said earlier, and I'll flip all the way back to leave this and turn it over to you for questions. That means, for the rest of us, we're looking at a different sort of China. And therefore, Brazil, going forward this decade, cannot assume that it's going to be getting the same constant influence from China that it has been the past 20 years, which, in my opinion, is actually going to end up being a good thing, because Brazil's destiny depends on itself. Thank you. So, we have close to 20 minutes left if anybody wants to ask questions.
We have 20 minutes to Q&A.
Martin Graydon, can I ask I think probably a semi-political question? Mm-hmm. The Brazilians often include in BRICS South Africa.
Yeah.
And indeed, I think there is a political grouping which includes South Africa. South Africa has appeared on your chart very briefly, but I don't think has featured in much of your analysis. Are you saying that therefore the inclusion of South Africa is essentially political rather than economic?
Do we have media here? Do we?
Yes, I think we probably do.
Are we on the record?
We're off.
The South Africans always get extremely annoyed with me. I think they are pretty lucky. South Africa's GDP is not much bigger than the size of Greece. So China is creating not only another Greece every 13 weeks, it's creating close to another South Africa every 13 weeks. So if you look at South Africa as itself, I've no idea why it's in the political club. But congratulations to South Africa for having persuaded the others that they should. And I think it lies in two related things. First of all, Brazil and India have a rich history with South Africa as an ally in trade negotiations and have some trilateral trade links formally. And so they were obviously quite sympathetic when South Africa started to push for it. And the second thing, and which is why it happened, I think the Chinese sort of regard South Africa as a understandable gateway to sub-Saharan Africa, and in particular the commodity prowess and the things that they need. If South Africa were to genuinely reflect the capabilities and the wants of the whole continent, then it would make sense. But for two reasons, if not more, I'm not sure if that really is the case. Because of the whole history of all of this, I get to speak to many of the policymakers in all these countries, including the next 11 ones and including the Nigerians. And the Nigerians aren't overly impressed with the idea of South Africa representing them. And if you look, this is a chart I didn't show, if you project into 2050, South Africa is not irrelevant, but it will never be 1% of global GDP. This dotted blue line shows you the difference between those that will be 1% or GDP or more. And you can see that Nigeria, given its remarkable demographics, is the country in Africa which has the truly exciting potential. Final thing to say about it, because it is part of the political club, and that political club makes a lot of noise. And at the meeting this spring, which is going to be in South Africa, and this is in a broad sense going to be so interesting for a number of reasons, they appear to be giving strong signs, the South Africans and I believe some of the Brazilians too, that they're going to announce the creation of a BRICS development bank. If they don't, that will be a sign that it's very difficult for these guys to agree on anything. And I'm going to be watching that very interestingly. For what it's worth, according to my sources, neither the Russians or importantly the Chinese are convinced of whether there is a need or whether therefore it should happen. But the South Africans are full of how this is a done deal, so it'll be very interesting to see.
If China's going to become less important as an export market for Brazil, which countries will become more important as a segment?
For Brazil?
Yeah. Because you've shown that Brazil will keep growing despite the fact that China's going to slow down and be less important. So where will they get that growth from?
Implicit in what we have assumed is that Brazil's growth is going to be more driven internally. And certainly export of commodities we have assumed will become less important. And I guess the key thing is we see some signs of a bit of policy development to help this. We assume that investment is going to start increasing as a share of GDP. So the most positive contributor to growth going forward for this decade we would see as investment, and we wouldn't believe that exports will be so strong. But the key for me, if I had any influence on policy, would be trying to do things as they have to improve the competitiveness of the non-commodity parts of the economy, allowing them to have a chance of competing more in international markets. But investment will be where we're assuming growth is going to accelerate.
Michael Charlton,
Hi, Michael.
Related question. The whole kind of phenomena of South-South as we want that's grown to the fore. Given that changing dynamic with China kind of moving away from investment to production-led to consumption-led, how's that going to impact on that?
That's a very interesting question. There's no two ways about it. If you look at the scale of trade that went on in sort of so-called South-South, so much of it appears to have been commodity related. And it's very hard for me to envisage it carrying on at the same scale because of this shift in China that we saw the past decade. But what one has to be careful, given the sheer enormity of the underlying axis we're talking about here, that that doesn't translate into thinking, well, it's meaningless. And one of the reasons, the sort of simplicity of it, but I'm very intrigued to see when we get the Chinese Q4 GDP data, partly that China has accelerated in Q4, as most analysts are assuming, but actually in terms of what that means for the real change as a year. Already from the trade data, you can see that the annual increase in Chinese imports was less than $100 billion last year, which is dramatically softer than it had been, with the exception of the crisis year, than any time for the past, I think it's 7 years. So if that were to be the new norm, people will slowly start to realize that the South-South, at least China-related South-South trade has come down a notch. I think it's not likely to be as soft as that because of the cycle of China being deliberately manipulated down. But it's tough to see it being repeated at the same scale of increase, in my opinion, that we have seen, certainly in the latter half of the past decade. Final thing to say in that context, it is kind of fashionable to diminish India at the moment as well because of India's considerable problems. But it's not, in my opinion, this is quite a controversial thing to say perhaps, it's not impossible that India could grow by more than China this decade because they have got spectacular demographics. And we begin to see the first signs, might regret saying this, the first signs of proper policy change as it relates to trade and investment with the rest of the world. And if India is going down that path, then by the middle of the decade, their influence on some of these things will become itself quite a lot bigger than people realise. But at the moment, it looks to me like the South-South consequences are going to be at a slower pace of growth than we have seen for much of the past 5 years. Gentlemen on the same road, then I'll come to the one in front.
Thank you. My question is, I was looking at your data on Mexico and Brazil.
Yep.
And the data for your projections is quite similar in terms, around 4-5% from Mexico. But we know that there is a lot of positive feelings about Mexico and possibly is going to do better than Brazil.
Yeah.
And also you mentioned that when you look at the next 10 years, possibly, again, the country that will benefit more from China will be Mexico. So why is it that your data projects nearly the same growth from Mexico and Brazil, and if we could do a kind of competition between the two biggest Latin American countries, which one will come on top?
Well, I went to the Olympic football final, which quite amazingly, as I'm sure many of you saw, Mexico won very easily. It was quite a surprise. So if that is any signal, Mexico is really, really quite intriguing, in my opinion, right now. When I reflect back on the 11 years of BRIC life, as some of you may hear, the Mexican policymakers were really irritated. Of all the other countries around the world, they were the ones that were the most irritated that it wasn't BRIC. I used to have meetings with some senior Mexican people saying, "Why not? What is it about Mexico you don't like?" And there were a couple of years where I thought, if there was any other country that should have been included that wasn't, maybe it was Mexico, because of course they have quite good demographics and so on. But by the time we got to the middle of the decade, I was rather pleased that I was lucky that I didn't include them, because when you look back, it's remarkable about how bad Mexico did the past decade, especially given the huge rise in oil prices. If you look at people always happily badmouth Russia, but if you look at the contrast between Russia's growth and Mexico's, given that they're both big oil producers, amazing. So one of the reasons why people don't, myself included or us included, don't consider stronger growth for Mexico is because we're tainted by the past. But in the circumstances of the new leadership and what they appear to be suggesting about reform, and this is an important thing for Brazil to think about, in my opinion, trying to get out of the way a little bit of big state companies, as well as encouraging more genuine labour reform, they could be important positives. There has been times where Mexico has made a lot of noises about those things in the past and they never followed through. So one would want to wait and see, but I think this, one wants to be careful of the inter-Latin regional political issues, but Brazil, there are things Brazil can learn from other countries closer to it and not just South Korea.
Jim?
Sorry, this gentleman here, I'll come to you in a sec.
It is very interesting to see this awareness around growth and how this brings the focus to the BRICS in special and to some new economies in relation to the let's say developed economies.
Yep.
But I'm still I still read little about the gap in let's say GDP per capita,
Yep.
so income.
Yep.
And I've seen some very rough forecasts onto how how this gap would change in the future, and it would be interesting to see your views on whether these countries, obviously, they're going to have more income per capita, or are they actually going to manage to join the club of the developed economies, which they're not growing, but they're still high income, and this is not diminishing.
Okay, so it's a shame that I don't have any of these pictures. We've done a lot of work about this as well, because, of course, at the end of the day, individual people don't eat GDP. It's their own wealth is what that matters. So you're right to raise these issues. In simple GES scores, we find very high statistical correlation between GES scores and wealth. That's one of the reasons why I talk so much about South Korea. South Korea's wealth to GDP per capita today is not far, vicinity of $30,000. Pretty much the same as Spain and Italy. When I was born, or in the first decade of my life, it's the same as an African country. So it may be pure coincidence, but I don't think it is. So if Brazil can get its GES score to 7.9, Brazilians are going to be very wealthy. As complicated and as simple as that.
Well, my question had to do with...
We have time for one last question,
okay,
and then we finish on time.
Mauricio from MJV Innovation, talking about... well, my question is also related to the previous one, because I would like to see a little bit comparisons in terms of investment in education, in graduate studies. It seems that Brazil has it's investing a lot of money in educating their people, sending them abroad.
We're finished.
Even to England. Many Brazilians are coming here to PhDs and master's degree in either design, IT, to drive innovation back to the country.
So of the, I don't know what I did there, but There you go. Of the 18 different variables that are in that growth environment score, linked to your question, I would say education is the most important of the 18. Ultimately, in the models we use, we don't weight it higher than the others, but we probably should, because of course, education is almost definitely the ultimate key driver of productivity. So I agree with that. I met, I should be careful about, well, I guess people can derive who I mean, but I met yesterday with the CEO of a top London-based global educational establishment, and he was talking a lot about the rise in the interest of Brazilian, not just middle classes, but aspiring middle classes to do more and better at all levels of education. It's absolute key. That again is one of the reasons why South Korea has done so well. So let's hope. I'll leave you. Let's hope you can do that, as well as find some better footballers for Manchester United to finally knock Barcelona off the perch. Thank you very much.
So before we invite you to carry on networking, there is a coffee kindly offered by our host. So thank you again for hosting us. I just want to remind you that we have already the date for the gala dinner. Personality of the year this year will be on the 14th of May. We cannot announce yet the name of our personalities, but I am already excited with the names that we've chosen. Very soon we are going to announce. So put in your diary 14th of May, and then visit our website for the forthcoming events. And thank you very much for coming. And Jim O'Neill, thank you very much for the brilliant presentation. Thank you very much. Thank you.